is a Mining Interactive video production.
Good afternoon. This is Midweek with Nick Nicolaas. Dateline April the 27th, 2011. And our feature today is postcards from Europe. We're here in beautiful Amsterdam. I'm here to interview Mr. Willem Middelkoop. I've known Willem for many years, and I've been very impressed with his progress over the years. He is a publicist, an exchange commentator. He's also a well-known media personality, and because of his contrarian views, and they are sometimes very contrarian, he is also in a regular speaking circuit. Together with Dr. Michael Berry, he is a pioneer in the discipline of discovery investing. Discovery investing is a phenomenal discipline. Middelkoop Discovery Alert Service, he started in 2008. He initiated the Gold and Discovery Fund that we will talk about later. And he has grown, which fund has grown in the past year from $10 million to $100 million. It's very, very impressive. He has a very successful gold and silver website, www.amsterdamgold.com. Willem Middelkoop, you made a name for yourself as a journalist. You wrote publications with regard to the economy and the financial markets since the latter part of the 90s. And from 2001 to 2008, most people remember you as an exchange commentator on Dutch TV, RTLZ, and a guest on several TV programs. You sold more than 100,000 books. You published your first book in 2007. That book, Als de dollar valt, or translated in English, As the Dollar Falls, wherein you warned at that time of the crisis and the risk in the world financial system. All this has come to pass now. But are Europeans worried about the dollar crisis and by extension the euro crisis as well?
I think the Europeans, they are worried about the debasement of currencies worldwide. And that's why we see many European investors now waking up and starting to buy precious metals in a physical form, but also starting to buy shares in gold and silver companies. And there's a growing awareness that commodities can really save your ass in a huge financial crisis.
Yeah,
so,
for sure.
So we see a huge inflow of capital into our fund, and it's getting better and better.
In 2008, you wrote your second book.
Yeah.
And that second book was The Permanent Oil Crisis. And when you predicted that in the short term we would see a top in world oil production with permanent high oil prices as a result. That prediction has come to pass as well. Tell us a little bit about that.
All major oil discoveries, or most of the major oil discoveries, have been done in the 1920s, 30s, 40s, 50s. So all these older major oil fields are starting to see declining production now. And this is a major reason for concern, because we need literally hundreds of new smaller oil fields to catch up for this declining production, oil production of these huge older major oil fields. So there's a lot of concern in the oil market that we'll reach a top in worldwide oil production very soon. And for the last 5 years, we've seen a plateau in worldwide oil production. And there's much concern that it will be very hard to keep the worldwide oil production growing year after year. And because of this concern and this stress in the market, we see very high oil prices like we've seen in 2007. We see it now again, prices going up to $140, $150 maybe.
Yes,
and
yes.
this is a reason for a lot of stress in the system.
Yeah, not only a stress in the system, and to investors that are knowledgeable about this, but even the man on the street realizes very much the crisis in their gas prices and so on, and they see their cost of living going up. It's really very. They all should be concerned. a lot of people should be into the hard assets, you know, realizing that they are the one that is the investment that will basically make sure that they have a retirement, you know. But let's go back to the third book that you wrote, which is Outliving the Credit Crisis, and that was a very important book. Yes, yes. Now, in order to do that, maybe you can touch base on that book, but also, though it leads us into your Gold and Discovery Fund, which is a hard asset fund, which is very much into discovery investing. So just comment on it in general terms, please.
I've been always a little bit afraid for a debt crisis in the financial system. And these worries, they started in 2003, 2004, 2005, so I started to research this, and I started to look into ways how I could save my own personal wealth in an environment with collapsing banking system, in a situation where you have a collapsing banking system. So I started to investigate the hard assets, safe havens like gold and silver. And when I started to invest into these gold and silver shares in 2003, 2004, I noticed that the best results were booked by investors who were investing into new discoveries on a very early stage. Yeah. So when a small, exploration sector,
very much so.
There are over 1,000 exploration companies listed on the Canadian Stock Exchange.
It's closer to 1,500, 2,000 now.
Even more.
But
there are new ones coming on stream every week.
But we make sure that we pick the right ones.
But you have to pick the right ones because it's a dangerous environment.
Very.
But if you're focused and if you invest in the right exploration companies working on the best on the best discoveries, you can make a killing. And we all know these stories, the 10 baggers, the 20 baggers. And then I started to work on a fund because it's very important that you spread your risk among dozens of exploration companies. This is very hard to do for a retail investor, private investor, because you have to work all day.
That's right. You don't have the time, and you don't have the analytical skills, which you bring to the table.
Yeah, and if you work for a fund, if you have a fund, you have the resources, to hire researchers, to read all the newsletters, and it's impossible to do as a retail investors to do this in a very professional way.
Yeah. Well, the Gold and Discovery Fund, for which you had your annual meeting yesterday, that's the reason I'm in Amsterdam. It was very interesting. It's a very unique fund. There's just no doubt about it. And from the questions of from the audience and so on, those were people already invested in your fund. It was very interesting for me, to be there and listen to. These were Dutch investors, and Dutch investors have always been very conservative. But they're at once, like I said, your fund was 10 million, now you're 100 million, and at once they're coming to the table. There's a good reason for that. They all recognize they have to be in the hard assets.
Because we have around 600 high net worth individuals, so we have no institutional money in the fund. So these people invested on average, like let's say $150,000, and these people, they are all afraid of the current environment in which we have the debasement of currencies, in which we see the banking system in getting worse, the problems getting worse every year. And people are really trying to flee to some safe havens, and commodities are really the place to go to.
Yes. Now, as far as these investors are concerned, mainly European investors, are Europeans very much, is it very important to them to be in gold and silver?
Gold and silver were not on their radar for the past 20 years, but it's getting back on their radar. They worry a lot about the debasement of currencies. They see inflation picking up. We had a few small banks which didn't survive the credit crisis of 2008. So people, especially people who have some personal wealth, they're starting to diversify. They're starting to look at real assets, hard assets. They also are aware that countries like China are looking to invest in hard assets as a way to preserve their wealth and capital. And many people are waking up, and many of my readers, as you said, I sold over 100,000 copies. So I also informed many people about the dangers of the current financial system. So I noticed that especially the more intelligent people, the more wealthy people, they're starting to educate themselves. They're starting to study it themselves, and they draw their own conclusions. They don't listen to the bankers anymore. They don't listen to the brokers anymore, and they like to follow independent analysts like me or Mike Berry or John Kaiser or yourself. And internet, the development of internet has been a wonderful tool for them to educate themselves in an independent way.
Yeah, and that's just it. You know, I think a lot of people still are thinking that they are buying gold and silver because of inflation, but you know, it's becoming more and more evident that gold and silver is being bought because of collapse.
Yeah,
and the
for
collapse,
the risk of collapse.
Yeah, a risk of collapse. That's better said. And you know, in the bond market and so on, American municipal bonds, state bonds, and so on, they're problematic.
The problems aren't over yet. The problems are getting bigger every day.
Absolutely.
And these type of investors, they know that, and they don't listen to the mainstream media anymore, and they don't listen to the politicians anymore, and they laugh about the central bankers. And what I see, they choose to buy some physical gold and silver as an insurance for their wealth. But besides the physical gold and silver, they buy some stocks, some shares in resource companies like our fund to also make some extra leverage and make some gains. So they buy the physical as an insurance. They don't buy it to make money, but they want to have some additional investments in funds who are invested in the resource sector to make some money. You
know, it's interesting because everything that you're saying fortifies my resolve that people don't trust government any longer. They trust business, and especially business that is focused on wealth creation. And the business that we're in, you know, Discovery Investment is not only about gold and silver and copper and zinc and lead. It is also about biotech and so on. And a lot of investors recognize that they put their faith more in companies with good management, than they put in government. And I think the day of government, the leftist governments, is over. You know, governments are saying we can't afford this any longer, and they can't. You know. So anyway, let's move on.
But people also notice that it are the governments who are in trouble. It are the banks who are in trouble, but it's not the companies who are in trouble. If you look at the balance sheets of companies, the balance sheets are okay. Especially balance sheets of resource companies, especially balance sheets of exploration companies.
Yes, it's you know it's a very interesting business that we're in. There's just no doubt about it. Now, you're the only fund in Europe that is financing exploration companies. And you're working on breaking discoveries. That's what you're doing.
Especially.
How do you do your research in the fund?
It's quite hard because you have these 1,500 companies which you have to follow, but fortunately they're all listed companies, and listed companies, they have to publish their news in a press release. So the only thing you really have to do is to read and to watch the list of press releases every day. So that's what we do, that's our start. And in a press release, you know, the title will give you 90% of the story. So when there's a real big breaking discovery, you will notice right away, and you will see it because the shares will be halted. And then when the company starts trading again, you will see a jump in shares. And we always look who is buying. You know, you never can really know which person is buying, but you can see on the size of the blocks which are being bought. You know, normal retail investor is buying 200, 2,000 shares in one transaction. But if we see after good discovery news that we see blocks of 30, 40, 50,000 shares being traded each transaction, then we know the institutional investors, the Royal Bank of Canada, the Sprots are buying as well. And what we do then is we look for the independent analyzers. There's some good newsletter writers, John Casey, Lawrence Rulston, a hard rock analyst, and if they also confirm that this discovery news is worthwhile to take very serious, we start investing our first portion of money into this new investment.
But you've also had your crystal ball, and you got into investments at a very early stage, and then you must count on management more so than anything else.
Yeah, yesterday we invited Dr. Michael Berry, who's also pioneer in discovery investing. And he told the audience, there are 10 points you have to watch, and you have to check the box, and how's the management, how's the capital structure, and so on. So we don't have 10 points. I think we have a list of 8 points, but you want to check everything. But even a stock promoter, which has maybe a not too good history, he can do a very good discovery. So
that's right. Somebody said
to me
once,
lucky.
Everybody's got to be lucky sometime. And exploration, because the explorationists, the geologists and so on, they can't look under the ground either. Yeah. Only the truth machine, right? The drill, when it goes in the ground, comes up with the results.
So when we see a drill hole, a discovery hole, 300 meters, of 20 grams gold per ton, we don't mind who is the CEO of the company. No. If it's a great guy with a history of discoveries, it's even better. But the company will be bought, the project will be bought, as long as there's enough value in the ground.
Yeah. No, it's very, very true. And promoters, of which I'm one, the job of the promoter is to raise as much capital for that exploration company.
You're not drilling,
as possible. As possible, because that's the lifeblood of an exploration company, is that drilling capital, right? That exploration capital. So I don't mind being called a promoter. I am a promoter.
Yeah, but they're important.
I feel very, very positive about what I do, and so do you. So. From that point of view, we're both in the same...
we listen to you. we even invest in your company sometimes if we think they're good.
Well, that's good. And
we had nice success with Tasman, which you put on our radar very early in the rare earth elements sector. And I think the developments in Tasman are looking quite positive. Yeah. So, but we don't buy every company.
No, but you're in Mawson as well. So
Mawson, Mawson.
And that's starting to look good. We're waiting for drill results there, keeping our fingers crossed.
Nice gold discovery.
So yesterday you had that annual meeting, and you had Michael Berry there on discovery investing. And it went all very well. But tell us, Willem, give us just 2 of the best discovery investments that you can give us today.
Actually, we're specializing now on silver discoveries because silver has been going up to $50 per ounce. Yes. So silver, if you're responsible for a silver discovery now, you can make a lot of money. And there are few on our radar. There's this new company, South American Silver, SAC, and it's in Bolivia. And they have this indium silver deposit. It's quite a new company, but the resource is already, I think, over 300 million ounces of silver. So that's a nice one. There's Wildcat, WS, as a new discovery. It's one of I think it's the top gainer on the CDNX this year. This is a manganese silver discovery. Yes. So there are very few very interesting stories. I like New Strike, which is a gold discovery in Mexico, NES. Almaden, AMM, that's another silver. That's a great discovery, great story. Excellent. Could be one of the best stories. So that's enough for today.
I've got a silver company too, and I'm keeping my finger crossed that will be the next one that will get lucky. You got to get lucky sometime, right? And
but we never invest to wait until they get lucky. We only invest after the discovery hole, because that's the problem I have with a lot of investors, retail investors, and let's look at one of our competitors, Pine Tree Capital. They invest in many exploration companies, but they have to wait until success is there, and We only invest after there's a discovery hole, after there's a first exploration success.
Yeah, no, I understand. There has to be some fundamental movement by the company for you to invest in. Yeah. So now I understand. So let's just quickly go on to something else, which lies close to my heart. But yesterday, also at your annual meeting, there were some questions with regard to gold price and silver price, and why stocks were lagging the gold and silver price. And what is your take on that issue?
We saw a huge run-up in share price between July, August 2010 and December. Our fund gained from 150 to 250 net asset value. It's quite natural after such a run-up that investors start to take some profit. Also during this run-up, there were huge financings, in October, September, November. All this paper is getting
to the market.
Yeah, to the market now.
Free trading.
Free trading. This is another problem.
Most companies, it's all 4 months hold.
Yes. So
therefore, if they finance in the fall, the paper in March became free trading.
Then we have a third factor. After the PDAC, most of the times people start to take profit. PDAC is early March, and people start to take profit in advance for the sell in May and go away factor. So what you see that every year the profit taking is starting a little earlier. So this year the profit taking started already in the early March. So many investors, they are afraid that we have this summer doldrums, which the Canadian markets are famous of. Yeah. So they want to go back into the market, but they will wait for the end of August, early September. But now we have a very strange situation that all these investors, they're taking some profits off the table, they're waiting, and they're in a wait-and-see attitude for waiting for September. But now we see this gold prices going up, we see the silver price exploding, and the investors are starting to get a little nervous that they'll maybe missing the boat. Yeah. So what I expect that gold and silver will continue to be rising in the next few months, so May and June, and at a certain point investors will really have to jump into the market much sooner than September, because other investors will start buying the shares, because the undervaluation of gold and silver shares is so enormous now. The undervaluation.
Yeah, they're trading like gold should be at 1,300, 1,200, and here's gold over 1,500, and the share prices haven't caught up to that.
We have one slide which we look at almost every day, and it gives a ratio between the gold mining shares related to the gold price and the silver mining shares to the silver price, and it's as low as during the panic at the end of 2008. So gold and silver shares are as cheap now compared to the gold and silver price as during the panic of 2008.
I'm also saying to people that if there is a correction and gold did come off for a couple $100 or even going to 1,200, it's immaterial because the stocks are already at that level. So
but for a fund like ours, it's great because we buy every day. We are 15% cash. We have new money coming into our fund every month, a few million. So we can take advantage of this situation, and we're really investing a lot of money as we speak, next few days, next few weeks, because we know almost for sure that there will be a catch-up situation in Q3 and Q4.
You know what I'm going to predict to you right now? I was at your annual meeting yesterday, and you had a lot of people there. That room is going to be too small for it next year. I am absolutely convinced of that. And Michael Berry is saying the same thing. Look, we're into a 10, 20, 30-year bull market here, We're already into 10 years of this bull market, but there is much more to come. There is the fundamentals are there for it to carry on.
The silver price, which is now going parabolic to $50 and maybe higher. I think there will be another jump higher. Silver price shows you what will happen to gold in 1, 2, or 3 years.
Yeah.
You'll have the same parabolic move.
Yeah, silver is already at, when silver was at 60 or 65 to 1, 64 to 1, I was saying to people it was going to 20 to 1 and everybody laughed. Yeah. And now it's already 34 to 1 and it's been as much as 32 to 1 to gold. So I still see it going to the 20 to 1 area, you know, I mean.
Because silver is such a small market and we experience here in Holland the same as Eric Sprott is always mentioning. He says, in my Sprott Money company, where he's selling his physical metals, he says the request and the buying of silver is as large as the buying for gold.
Yeah.
And we notice the same. I have a web shop here in Amsterdam which is selling the physical metals. We're selling as many kilos of silver as gold. Yeah. So there's huge demand for silver now. And the silver market is so small, so this explains the
You know, I was in Stuttgart a few weeks ago at the Stuttgart Messe, which is one of the largest conferences, bank for banks, and there were also mining companies there and so on. But I was blown away by this, that people were, number one, lined up for silver. Yeah. Number two, I went up to the same booth that were selling silver and gold, and I saw seltene erde, which is rare earth. Yeah. And I walked up there, I said, You sell rare earth? Yeah. And they said, yes. Yeah. Would you like us to store it for you, or would you like us to ship it to you? Yeah. And I couldn't believe it.
Well, we called Toyota, and they would like to buy it.
Yeah, right, exactly. Yeah. But I was, it was very interesting to me. So anyway, Willem, I think we must finish here because the hotel needs the room that we used here today, which was very appreciative, from the Hilton hotels here along the canals in Amsterdam that I used to skate on when I was a young boy.
Was it 15 years ago? Eh?
No, it was a long time ago. And so it was prior to 1956. Yeah. So anyway, I thank you very much, Willem Middelkoop, for the opportunity to interview you. It's been fun. And where can the viewers get in contact with you?
We have a website for our funds. It's gdfund.com, from Gold and Discovery Fund, so gdfund.com. We have our website in Dutch, but also in English, so they just can
change it.
Click on the flag. We are open also for international investors. Our investors are mainly Dutch private high net worth individuals at this moment. But we would love to have some Canadian investors. We're open for pretty much everybody.
Well, thank you again, Willem.
Okay. Thanks for the
fun,
occasion.
Really.
Yeah.
Well, this is it for now, dear viewer. And just stay the course in this very volatile market. And again, be patient. Don't panic. This financial tsunami is still not finished. That's for sure, but stay with us, listen, do your own homework, don't leave it to somebody else. It's your own wealth that you have to protect. You have to protect your wealth first before we are starting even to talk about making money. And with the interviews that we're doing, we hope to assist you in making some decisions and maybe do a little better than just protecting your wealth and make some serious money as well.
If I can add a little side note to this, I always tell my audience that I have a very simple rule now. I keep 25% of my wealth in cash, 25% in the physical stuff, gold and silver, 25% in natural resource stocks, which our fund is also one of the good positions for, and 25 in real estate, and most of the time that's your own home.
Yeah.
And then, we don't know if we'll end into hyperinflation. We don't know if we'll get a deflationary collapse. Nobody knows. No. But if you use this simple 25, 25, 25, 25 portfolio, you're always safe.
Real estate is a hard asset. Yeah. Old paintings, old Dutch masterpieces is a hard asset. But But
it's good to keep some cash as well, because there always can be one more severe downturn for the gold price before we really start.
And some real cash, of course, is buying the small 1/10 of an ounce of gold, because it's going to be very hard to buy a loaf of bread with an ounce of gold. Right? So you have to have the small stuff.
We even print our guilders, the silver, real silver guilder. We mint them ourselves.
Oh,
so
fantastic.
I can give you one. You know,
thank you very much.
You know these from the past. Huh?
Yeah, I certainly do.
So this is the real money. The real money.
that is real money.
Okay, take it home.
Well, my dear viewers, with that, this was Midweek with Nick Nicolaas. And as always, stay tuned. Bye for now.